Welcome to the third webinar in the Sifting Through the Facts webinar series brought to you by WestPath Benefits and Investments. I'm Leah Holsworth. I'm a member of the WestPath Benefits team, and it's my pleasure to moderate this webinar on the fundamentals of Social Security. Please know that we will be recording the webinar. For the first slide, it will be the really exciting slide that makes our legal team really happy, and it's just a general disclaimer, just letting you know that this is an informational webinar only, and that we will be sharing some other resources for you if you like the Social Security Administration and other resources for you to go to for more details at the end of the webinar. And also, before I introduce our speaker, we would love to get to know a little bit more about you. By using the question feature that you find in the box right next to, it should be in the upper right-hand corner of your screen, if you will type in and let us know where you're listening in from. So are you from the Northeast or from Texas or the Midwest? Tell us where you are from. All right. So first of all, you guys are doing awesome because you figured out the feature really well. We have people coming in from New York, from Georgia, from Northern Illinois, Minnesota, Texas, Virginia, New Mexico. You guys are rolling in. We have some more Virginia, Indiana, Tennessee, Massachusetts, Missouri, Ohio. Bob, you've got a crowd coming in from all over the United States.
Great to see.
Yep. Michigan, Missouri. Where else are we? Southern Minnesota, Southeastern PA. Awesome. Perfect. So we have them coming from all over the United States, which is very exciting. We have a large number on the webinar today, which makes us pleased. So the next question I have for you using that same questions feature is tell us what your role is in ministry. Are you an elder or are you a deacon? Are you with children's ministry or music ministry, or are you lay? Tell us a little bit more about yourself. All right, we have a lot of elders. We have, you guys are going fast that we can't even read the screen. That's awesome. We've got music ministers, part-time pastors, local pastors, associate member, children's deacon, administration, a DS is in there, some extension ministers, licensed local pastors. All right, from all over. Super. That's exciting. Thank you so much for joining us today. So we do have a lot for you on today's webinar, and so we're going to keep the lines on mute. If you do have a question, you can use the question feature just like you just did to let us know what your role in ministry is and where you're located. We will do our best to get to them at the end of the webinar, but if you don't, please note the resources that Bob will be mentioning at the end of the webinar, but we will do our best to answer any questions. So because I know there's a lot of great information, I want to just get started with the webinar. It's my honor to introduce Bob Christoffel. He is the manager of benefits education here at WestPath. He oversees a team of benefit educators who provide financial retirement and other benefits education services for clergy and lay employees throughout the denomination. Prior to joining WestPath in 2014, Bob worked for 12 years at the Cultural Institute Retirement Systems in New York City. You will notice the accent. A not-for-profit multi-employer pension and 401k system providing benefit communications and participant education for employees of the New York City museums, botanical gardens, zoos, and performing arts centers. Before that, Bob spent 12 years at Dreyfus Corporation, where he was a licensed investment representative in the Corporate Retirement Services Division, focused primarily on participant education for national corporate 401k plans. So it is my pleasure and privilege to turn this webinar over to Bob.
Thank you, Leah. Greetings from Glenview, Illinois. Again, my name is Bob Christoffel, Manager of Benefits Education at WestPath. And as Leah mentioned in the disclaimer, this is basic information on Social Security retirement benefits. For specific information on your situation, it's always best to talk to a Social Security representative. The Social Security program marked its 84th anniversary on August 14th of 2019, so it's been around for a long time now. And it was established to provide a base of financial protection for working people and their families when earnings are lost due to either retirement, disability, or death. In addition to worker benefits, the program also provides benefits to spouses and children of workers. And these benefits are an earned right, and they maintain their value with automatic annual cost of living increases. Nearly all Americans participate in Social Security. 96% of workers are covered. 175 million people are paying taxes to support the Social Security programs. And this webinar is designed to cover some of the fundamentals of the Social Security program. We've put together an agenda of the topics that we're going to look at this afternoon. First, we'll focus on where will retirement income come from? What are the different sources other than Social Security, which was never intended to be your primary source of income at retirement? We'll go through how you qualify for retirement benefits. At what age can you collect the benefits? We'll go into some considerations about taking it early, taking it at a normal, or taking it at a later date. Age will affect your benefits. We'll talk about the impact of age. Who else can collect benefits on your record? And then we'll go into survivor benefits, benefits while you're still working and receiving Social Security. And then I'll take you through the process of applying for benefits. We'll talk about setting up your own account on the SSA.gov website. Social Security is an important source of retirement income for many Americans. On average, Social Security provides 33% of retirement income to those that are 65 and older, with additional income coming from other sources. Unfortunately, according to a study done by the Center on Budget and Policy Priorities, Social Security makes up a majority of retirement income for 61% of elderly recipients, a third of whom actually count on Social Security for 90% or more of their retirement income. Next, we'll go into how do you qualify for retirement benefits. Your wage and salary information are reported to Social Security on an annual basis via your W-2 form. You need to earn credits to receive a benefit. 4 credits can be earned each year. It doesn't matter when in the year the wages were earned to receive these credits. In 2019, when a worker earns $5,440 or more, he or she has earned the maximum credits for the year, $1,360 per credit. Since a worker really only needs 40 credits throughout their entire working career, it is relatively easy to become insured or vested for a Social Security retirement benefit, and this vesting can happen in just 10 years. Social Security will actually look back over your earnings history throughout your working career and find the highest 35 years. And they don't necessarily need to be the highest 35 consecutive years. That's why later on we'll discuss why it's important to open up your own Social Security account to check that your annual earnings figures have been reported accurately to the administration. When is the best time to retire? And when is the best time to take Social Security are 2 really important questions. And the answer does depend upon your personal situation. But the following factors should be considered. What are your financial needs? How is your health? What is your family longevity? Whether you plan on continuing to work in retirement or not. What are the sources of retirement income will you have available? The increase in full retirement age was the result of changes made to the program back in 1983. And the amendment phased in gradual increases in the age for collecting full Social Security retirement benefits. It phased this in over a 22-year period of time. Prior to this, full retirement age for everybody was age 65. Full retirement age increases apply to all retirement benefits as well as survivor benefits. Now, Social Security uses the term full retirement age, but you may also hear it referred to as normal retirement age. But for clergy, normal retirement might be a different age than Social Security's definition of normal retirement. But regardless of what your full retirement age is, according to this chart, reduced benefits can still be paid as early as age 62. Now we'll talk about how age does affect your benefits. The age at which you choose to commence your Social Security retirement benefits will impact the amount of your benefit. According to the Social Security Administration, if you have not reached full retirement age, or FRA, it is usually not advantageous to begin receiving benefits. The income might not be needed for your current living expenses and will receive a permanent reduction subject to an earnings limit and more likely to be taxed. If you are retired before you reach full retirement age, you may need this income. You may need to begin receiving benefits in order to meet your current living expenses. Benefits will at least be partially tax-free, and they may enable you to delay drawing income from other retirement assets that are growing on a tax-favored basis, such as the United Methodist Personal Investment Plan or the Clergy Retirement Security Program Defined Contribution Plan. Now, in this webinar, we will discuss the reduction, we'll talk about earnings limits, and taxation of benefits in a few moments. Now we're going to look at how much of a reduction you will receive if you have decided to take your benefit prior to reaching that full retirement age, or FRA. If you decide to receive your benefit early, you're going to receive a reduction for the early commencement. The theory is you're getting it for a longer period of time. Now, Social Security has broken it down. For the first 3 years or less you are from that full retirement age, there is a reduction, and the reduction is 0.5% per month, and that equals 6 2/3% per year. In addition, if you are more than 3 years from full retirement age, there is an additional reduction of 0.512%, or 5% per year. And I'd like to just give you an example. Let's say you have a worker who has decided to begin their benefits exactly 4 years from full retirement age. So we'll say, Leah, that they're 67 is full retirement age, and they're currently 63, and they're thinking about taking their benefits. So they would have to look at both of these levels. 3 years, the first 3 years would be 36 months at 0.5%, 6 2/3% per year, or a 20% reduction for that first 3 years. And then you need to go for the period more than 3 years out, which in this example is 1 year at 0.512% per month, or an additional 5%. So you would add the 20 and the 5% to get a total of a 25% reduction. Next, we're going to focus on delayed retirement credits. If you decide to wait to receive your Social Security retirement benefits past your full retirement age, you're going to receive what's referred to as delayed retirement credits for the late commencement. And these delayed retirement credits are calculated as follows: 0.2% per month, or 8% per year. 12 times 0.2% equals 8%. Once you reach the age of 70, you will no longer receive any delayed retirement credits. So, for example, someone born September 1st, 1954 will have a full retirement age of 66. If they delay receiving benefits until age 70, when those delayed retirement credits cease, they would receive a 32% increase because of these delayed retirement credits. And again, that's just 4 years or 48 months multiplied by 0.2%, 8% a year multiplied by 4, a 32% increase. So that is how age impacts receiving your benefits. If you take it early, there's reduction. If you take it later, there's delayed retirement credits. Someone born after 1960 will have a full retirement age of 67 and can only receive up to a 24% increase in their benefit by waiting to age 70 because they only have 3 years of these annual 8% increases. 3 times 8%, a 24% increase. So for example, someone born September 1st, 1954, full retirement age of 66, they could receive a 32% increase. So age certainly has a big impact on your benefits. So next we'll look at, we'll put some dollar amounts in this next example. This chart looks at someone born in 1955 with a full retirement age of 66 and 6 months, or 66 and a half. It assumes that their benefit at this full retirement age is $1,000 per month. If the person had taken their benefit at age 62, go to the left, the earliest age they're allowed to begin receiving benefits, they would have started at $725 per month because of these early retirement reductions. And it would be calculated as follows. 3 years, the first 3 years at 5/9% is a 20% or a $200 reduction from the 1,000, and then an additional year and a half or 18 months at the 5/12% level, an additional 7.5% or $75 added to the $200 for the first year would amount to a $275 reduction in their benefit. If they wait until age 70, when delayed retirement credits stop, they would receive a higher benefit because of these delayed retirement credits and would begin at $1,280 per month. And again, this is because they would receive that 2/3% per month in delayed retirement credits of 3.5 years or 42 months, bringing their benefit up to $1,280. We'll next look at how your benefit is actually calculated by the Social Security Administration. All monthly retirement benefits are based on your primary insurance amount, also referred to as PIA. The PIA is the amount payable to you at your full retirement age. Again, if you start your benefit earlier, it will be less than the primary insurance amount. That's the yellow circle. If you start your benefit later, it will be more than the primary insurance amount. Social Security will go through a 3-step process, and they're really important because they are looking back over your full working career, your full earnings and wage history. So the first thing they want to do is adjust your wages. The administration will index your earnings to reflect the change in general wage levels that occurred during your years of employment. And such indexing ensures that your future benefits will reflect the general rise in the standard of living that occurred during your working lifetime. So that's the first step, is this indexing of your wages. Step 2, they will find the monthly average of your 35 highest earnings years. Again, they don't have to be consecutive. The administration uses your highest 35 to arrive at your AIM, average index monthly earnings. Now, this is very important. If you have not worked for 35 years, some of the included earnings for those years might be 0. Step 3, the result is your averaged index monthly earnings, and then the administration then breaks down portions of that amount. In this example, you see the AIM is $6,000. So they'll break down the portions of the AIM as follows. You will receive 90% of the first $926 or $833, and then that is added to 32% of the amounts between $926 and $5,583, and that was $1,490, and then 15% of earnings over $5,583 up until the $6,000, which was the AIM, is an additional $63. So the total primary insurance amount in this example is $2,000 $386. Again, it'll be reduced if you start earlier or higher if you start later. We'll next look at some examples of primary insurance amounts. We'll look at a maximum and an average benefit. The maximum benefit is only payable to those who had the maximum taxable earnings for 35 years. The maximum benefit you can receive at full retirement age in 2019 is $2,861, $34,332 annually. The average benefit being received is $1,461, or about $17,532 annually. In 2019, the maximum earnings that are taxable is $132,900. So for someone to get the maximum benefit, they would always had to have the maximum earnings for that year over a 35-year period of time. And typically what we've seen is that the maximum earnings amount taxable will go up, but that's not always the case. It did go up from 2018 to 2019, but from 2015 to 2016, it was the same number of $118,500, but generally it will increase. When you start receiving your Social Security retirement benefits, and that's the key, you've started to receive your benefits, other family members may also be eligible for payments. Keep in mind that you must begin your benefit before your spouse or children can collect benefits on your record. And these benefits are in addition to yours. They're not taken away from your benefits and are figured as a percentage of your primary insurance amount, not your benefit amount, and they are subject to a family maximum. Benefits can be paid to your unmarried children if they are younger than 18 or between the ages of 18 and 19 and in school full-time, or age 18 or older and disabled. The disability will have had to have started before age 22. Benefits can also be paid to your spouse if they are age 62 or older and maybe they have a limited work history, or at any age if caring for a child of the worker. The child must be younger than 16 or disabled and entitled to a Social Security benefit on your record. When the youngest child turns 16, the spouse's benefit will stop, even though the child's benefit will continue. However, if the child is actually disabled, the spouse's benefit will continue as long as the child is under his or her care. Next, if you're divorced, your ex-spouse may qualify for benefits on your earnings record. In some situations, they may get benefits even if you are not receiving them. To qualify, a divorced spouse must be married to you for at least 10 years, have been divorced for at least 2 years in cases where you have not filed for benefits, be at least 62, be unmarried, and depending upon certain circumstances, not be entitled to or eligible for a benefit on their own record that is equal or higher than half the amount of your record. Keep in mind that the benefits they get don't affect the amount you get or your current spouse can receive. A spouse who has not worked or who has low earnings can be entitled to much as 1/2 of the retired worker's full benefit. Now, if a person is eligible for both their own retirement benefit as well as for benefits as a spouse, the Social Security Administration will always pay your own benefits first. If your benefits as a spouse are higher than your retirement benefits, you will get a combination of benefits equaling the higher spouse benefit. If spouses want to get Social Security retirement benefits before they reach full retirement age, the amount of the benefit is going to be reduced. And the amount of the reduction depends upon when the person actually would reach FRA or full retirement age. Again, keep in mind that divorced spouses' benefits have no impact on benefits for the worker or the worker's current spouse. Let's look at 2 examples of this. In the first example, Randy is receiving $1,200 $200 a month. His wife, Lisa, is entitled to receive $1,000 a month. So look at those two numbers, $1,200 for Randy, his wife, Lisa, $1,000 a month. And that's more than half of Randy's benefit. And because Lisa's benefit is more than 50% of Randy's, she cannot file for spouse's benefits. In the second example, Eileen is receiving $1,800 a month. Her husband, Andrew, is entitled to receive only $600 a month, which is less than half of Eileen's benefit. Andrew will receive a combined benefit, $600 from his record and an additional $300 from Eileen's record for a total of $900, which is exactly 50% of Eileen's benefit. Remember, Andrew can't receive this extra $300 until Eileen actually files for benefits. Next, we'll go into survivor benefits. Survivor benefits are based on your primary insurance amount on the date of death. The length of marriage requirement for a widow or widower is 9 months, and for a surviving divorced spouse is 10 years immediately before the date of divorce. Please note there are going to be exceptions to the duration of marriage requirements. Generally, you cannot get widow or widow's benefits if you remarry before age 60. But remarriage after age 60 or age 50 if you're disabled will not prevent you from getting benefit payments based on your former spouse's work. And at age 62 or older, you may get benefits based on your new spouse's work if those benefits are indeed higher and to your advantage to receive. And at age 62 or older, you may get benefits. Widows and widowers can begin getting Social Security benefits at age 60 or again, age 50 if disabled. Regardless of the change in full retirement age, a widow or widower can still receive 71.5% of the worker's benefit at age 60. A widower or widower can receive a survivor's benefit at age 60 and then switch to a benefit on his or her own record at age 62. Benefits paid to a surviving divorced spouse who is 60 or older will not affect the benefit rates for other survivors receiving benefits. Benefits can be paid to both a widower or widower and a divorced widow or widower at the same time. The payments to a widow would not impact the payments for a divorced spouse. Now, often we are asked, can we continue to work and receive retirement benefits? And the answer is yes. But it's important to consider the following. If you are under full retirement age for the entire year in 2019, Social Security will reduce or deduct $1 from your benefit for every $2 you earn above these annual limits. And for 2019, that limit is $17,640. If you reach your full retirement age, Social Security will deduct $1 in benefits for every $3 you earn above a different limit. In 2019, the limit on your earnings is $46,920, but they only count earnings before the months you reach full retirement age. Your earnings in or after the month you reach full retirement age won't reduce your benefits. The Senior Citizens Freedom to Work Act of 2000 eliminated the retirement earnings test for people who have attained full retirement age. So if you reach full retirement age, you can earn as much money as you want, and your Social Security benefit will not be reduced. Taxation is a different issue, which we'll talk about. But the good news is that when you reach this full retirement age, your benefits will be increased for any month you didn't get a benefit or received a reduced benefit. Now, federal taxation of Social Security benefits. About 40% of people who get Social Security have to pay income taxes on their benefits. On the 1040 tax return, your combined income is the sum of your adjusted gross income plus non-taxable interest plus half of your Social Security benefits. For example, if you file a federal tax return as an individual and your combined income is less than $25,000, your Social Security benefits would not be subject to federal taxation. If your individual combined income is between $25,000 and $34,000, you may have to pay taxes on up to 50% of your Social Security benefit. At the end of each year, you're going to receive a form from the administration, the form SSA-1099, Social Security Benefit Statement, showing the amount of benefits you receive. And you would use the statement when you complete your tax return to find out if you must pay taxes on your benefits. If you are a lay employee, you and your employer each pay taxes for Social Security of 6.2% and 1.45% for Medicare on all earned income. Your employer pays part of the cost, you get all of the benefits. Clergy are considered self-employed and pay both pieces, or 12.4% plus 2.9% for Medicare, for a total of 15.3% on 92.35% of their net earnings. There are additional taxes of 0.9% on income over threshold amounts and a 3% surtax, which applies to the lesser of net investment income or modified adjustment income above certain limits. Next, we'll talk about some interesting resources available to you. Social Security has some terrific materials available and really a terrific website, which I registered for a couple of years ago and do utilize. This website, ssa.gov/5steps, looks at 5 different things that they encourage you to do. Get to know your Social Security benefits. Very important, verify your earnings. Estimate your benefits. At some point, you will apply for benefits and then manage these benefits going forward. It is something I encourage you to do. If you haven't already, create your own personal Social Security account at ssa.gov. Very easy to find. Click on the sign in or sign up button in the upper right corner of the screen. And remember, there is no fee to create an account, but you must have an email address, a Social Security number, and a U.S. mailing address. You will be sent an activation code either by email or to your mobile device. That's your choice. You only have 10 minutes to activate this code. And you're going to need to provide some detailed personal information as well as answer some questions about previous employers, loans, mortgages, previous addresses, what color car you owned in 1981. They really want to make sure it's you. And some of these questions can be a challenge if you don't recall the information. But once you do, you create a username and password. And you're going to need a one-time activation code each and every time you sign in. And then once you're in the website, there's a tremendous amount of things that you can do. You can, and this is really important to do, view your earnings history. Make sure they have everything listed correctly, because this, as we discussed earlier, is what your benefit will be based upon. You can get benefit projections to see what your anticipated income from Social Security will be. If you're already receiving benefits, you can request tax forms. You can request to replace your Social Security card. They can also provide you with a proof of income letter if you need that. One of the things I like to do on the site is request a Social Security statement, and it's going to tell you a lot of really good information. Not just what your benefit would be at FRA or full retirement age, but also what it would be at age 62 with reductions, and at age 70 with delayed retirement credits. And just remember, those delayed retirement credits do stop at age 70 and age 62. The reason they tell you that is because that's the earliest you can start receiving benefits. It will also provide you information on family survivor benefits. But your earnings record is really important to check and review for accuracy. Applying for benefits. I read an article on the administration's website that indicated the best time to call. And they suggest the phone lines are busiest early in the week as well as early in the month. So if you have flexibility to wait till later in the week or later in the month, you'll be more successful at getting through. They do have representatives available from 7 a.m. to 7 p.m. on business days. For recorded information and other services, they're available for 24 hours a day, 7 days a week. What I have found with the Social Security Administration is that they are much more friendly than they used to be. They do encourage people to call, to sign up for their own accounts. They used to mail you out statements every year. They don't do that anymore, but they do encourage you to set up appointments to visit with them. And I would encourage you to do that as well. What will you need to apply? Well, you're going to need your Social Security number, which makes a lot of sense. Proof of age, your latest W-2 or self-employment tax return, earnings estimate, bank information for direct deposit, information about marriages and or divorces, and information about any military or railroad service. EY can be a tremendous resource for our eligible participants. EY's Financial Planning Center, as well as the Financial Planner line. The website has some terrific articles, calculators, tools, and other resources available to you. I encourage you to call EY for questions about your own individual situation. Some of the things that EY can help you with, that really important question. They can help you decide when best to commence your Social Security benefits, take into account other sources of retirement income that you might have, talk to you about ways to maximize your Social Security benefit, how to reduce taxation of those Social Security benefits, and they can also provide you with a retirement funding analysis. Stay in touch with EY to help monitor this retirement funding analysis and update your plan accordingly. So EY is just a tremendous resource for our eligible participants. Now, I would encourage everybody participating in this webinar to try to commit to at least 3 actions in the days and weeks following this webinar. And some of those actionable items could be as follows. Review the earnings section of your Social Security statement for accuracy. And just think they're going back over a long career, in many cases a very long period of time. It easily could be 35, 40, 45 years that they're looking at. So you want to make sure that that information has been reported accurately, because they are going to take the highest 35 years. And if there's missing information, in some cases, they might count that as a 0, which would hurt you in the calculation of your retirement benefit. Create a reminder to review your statement each year. Do it next year. Do it every year to make sure that information continues to be reported correctly. Step 3, use the retirement estimator to get projections at different points in time. Okay. Set up an account on SSA.gov. And once you've done that, there's a tremendous amount of resources on that website. I think we owe it to ourselves. We pay into the system to know as much about it as we can. And then visit EY's financial planning website, complete the financial wellness assessment. And another action item would be to call EY to discuss your specific strategies, particularly if your situation is not standard. Call the Social Security Administration, reach out to EY. And the last slide I want to share with you is a list of additional resources, Many of these resources were used to create this webinar. And, I've spent a lot of time on the website and reading some of the publications that Social Security has put out. And, I do give them credit. I think the materials, the booklets are very well written and easy to understand. And, some of the ones that I refer to are available on SSA.gov. One really terrific publication simply called Retirement Benefits. Very important booklet, what every woman should know regarding Social Security benefits, survivor benefits. Another publication called Understanding the Benefits. An additional publication focusing just on survivor benefits. We did discuss in this webinar how work affects receiving your benefits, the impact. Really good booklet regarding that. A complete retirement checklist, as well as a tax guide for our senior participants. So some really great resources and tools are available for our participants, and I would encourage you to take advantage of that. But at this point, I do want to thank you for your participation in this webinar. I'm going to turn it back over to Leah. We really had a tremendous amount of favorable response to this webinar, and I want to thank you for participating.
All right, thank you so much, Bob. I'm going to run through just a couple things, and then I have a couple questions that maybe you can answer or you can help direct, or maybe it is just going to the Social Security Administration or EY for that help. But before we get to those questions, again, thank you for attending, and also and then also just to let you know that we do have a series of, this is a part of a series of webinars that we have put together here at WestPath called Sifting Through the Facts. We have 3 more webinars coming up, and you can register for them by going to westpath.org and then clicking on the site for WestPath participants. When you get there, just put sifting, the word sifting, into the search box, and it'll bring you up to all of the different webinars. But what we have on tap for you is on Tuesday, October 15th at 2 p.m. We have 50 ways to support your pastor's well-being. This is a great one for not only pastors, but the staff parish committees. On Tuesday, October 29th, for those of you who are in HealthFlex Exchange, that would be a great one because they'll be giving tips on how to choose the best plan for you. And then Bob is back with us on Tuesday, November 5th at 2 p.m. On Financial Wellbeing 101. So basic information on all of those financial pieces. And then also we do, if you are have the United Methodist Personal Investment Plan, we have 2 webinars scheduled, one on Wednesday, October 23rd at 11 a.m. and another one on Tuesday, October 24th at 1 p.m. And those registration links can be found on the WestPath website again. Just go to the Events tab and you can go ahead and click on the registration link. And we will be happy to share more with you about UMPIP and all the different benefits that are available through there. So we had a couple questions, and some of them are ones that I'm very happy to answer. And that one is that we have one that is basically we have, is this recorded? And yes, it is. And you will be able to see all those different slides and all the different recordings that we do have up. We had 2 previous webinars. As you may have remembered, I mentioned that this is our 3rd one. We had a webinar on the opioid crisis and then another one on health savings accounts. You can watch those, or you can register for those other webinars on the WestPath site. And I will be sending a link, an email out to everybody with a link once we have it for this recording so you can watch it or share as you feel needed. I think Bob had answered a question on this one already, but a good place to calculate whether or not to wait till you're 70 to retire or not can be found on the Social Security Administration site?
Yes, it can. Okay.
And then maybe this one is probably an EY question, but just to confirm that. For clergy who with parsonages, is that counted towards their AIM?
Check with EY.
Yeah, I was going to say, I think some of those are so unique to clergy that is not going to necessarily find in some of the basic Social Security information. And then we do have a couple regarding disability and retirement and benefits, and those definitely are the ones to go either to EY with or to go to the Social Security Administration. Let's see. Then I guess, let me see what else we have. Is there a limit that you can take when you earn benefits after your full retirement age? I think those were some slides that we went through.
If the question, Leah, is once you reach full retirement age, there is no limit on the amount of money you can earn.
Okay.
You would still have taxes to deal with, but there is no limit on earnings.
Okay.
Once you reach full retirement
Only
age.
if you're before full retirement age, you've taken benefits and you are working.
Right, then
you might see some penalties or things like that.
You would see a reduction in the benefit based upon certain thresholds of income earned. But once you hit full retirement age, make as much money as you want.
Okay. All right. And again, for those exact numbers and for your unique situation, it's back to EY. Perfect. And then, so I think those are some of the questions we have. We have a couple questions about whether the slides can be printed. I can follow up to see whether or not they're going to be available, and if they are, I will share that with you. But other than that, I will go ahead, and we're just going to go ahead and close up the webinar. If you, you'll have my email if you have any questions, but again, I think probably the best thing to do is, because this is such a unique and personal situation, is to always go back to EY and the Social Security Administration to get information that's directly related and can be tailored directly to you. But again, thank you so much for everybody for participating in the webinar. This is one of our more popular webinars that we've had. So big thank you to Bob for his time and effort to put it together.
My pleasure.
And also just a reminder that there's lots of good information out there, but really kind of two locations that are ideal for you, that would be the EY and the Social Security Administration. All right. Thank you, everybody.
Thank you all.